What if I told you one small piece of plastic in your wallet holds more than millions? That doesn't just let you tracks, predicts, and profits from every move you make. This isn't a government, it's not a central bank, it's American Express, the trillion-dollar money machine that built an empire on trust and control. Once it carried letters, now it carries the world's debt, but how did it happen? How did a company born from the dust of stagecoaches and telegrams become one of the most powerful financial entities in modern history, shaping how we spend, borrow, and even think about money? Tonight, we'll travel through 160 years of hidden history, from the birth of the American economy to the rise of digital finance. We'll meet the men who built it, the crises that nearly destroyed it, and the machine that never stopped running. Because behind the luxury, behind the black cards and airport lounges, lies a truth most people never see. American Express isn't just a company, it's a system that quietly turned loyalty into leverage and debt into destiny. Long before credit cards and rewards points, America was expanding west. It was 1850, the age of steam trains, gold rushes, and telegrams. Three men, Henry Wells, Fargo, and John Butterfield, ran competing express companies. They carried valuables, cash, and parcels across the growing United States. But theft, bandits, and risk were everywhere. So, the three rivals joined forces and created a company built on trust and speed. They called it American Express. In its early days, it was simple. Secure deliveries, reliable service, guaranteed integrity. But even in the 1800s, American Express was already thinking differently. They realized something crucial: people didn't just want delivery, they wanted safety. In an era with no modern banks, carrying cash was dangerous. So American Express began offering money order safe, paper substitutes for cash. Then came traveler's checks, a revolutionary product that allowed people to move around the world with security. It wasn't just a company anymore, it was a trusted financial brand. And in the world of finance, trust is everything. Fast forward to post-war America. The 1950s brought prosperity, and with it the rise of consumer credit, cars, homes, vacations. The American dream now came with a monthly payment plan. American Express saw the opportunity. In 1958, it launched its first charge card, not a credit card, not yet. This card had to be paid in full every month, but it was exclusive only for the wealthy, the professionals, the elites. While Diners Club and MasterCharge went after the middle class, Amex positioned itself as luxury finance. It wasn't just about money, it was about status. The gold card, the platinum card, these became modern symbols of achievement, but behind the glamour, something deeper was happening. American Express had created a data engine. Every transaction, every restaurant, every flight, every hotel was recorded, analyzed, monetized. Decades before Google and Facebook, American Express built one of the world's first consumer data networks. It didn't just know how much you spent, it knew who you were. By the 1980s, American Express was no longer a card company, it was an empire. It owned Shearson Lehman, one of Wall Street's biggest investment banks. It owned IDS Financial Services, insurance, and mutual funds. And it had millions of cardholders around the world, people who didn't just use Amex, they believed in it. Its slogan was simple: don't leave home without it, but behind the marketing, the machine was evolving. The more people spent, the more American Express earned, not just from fees, but from interest, data, and loyalty programs that locked customers into its ecosystem. In a way, it was the first platform economy. Decades before tech giants, American Express didn't just process transactions, it controlled the network between buyers and sellers. The more merchants it signed up, the more valuable the card became. The more power Amex gained over merchants. By the 1990s, it was a global system, a closed financial loop running on brand, trust, and exclusivity. But exclusivity comes with a price. In the 2000s, competition was rising fast. Visa and MasterCard open networks began dominating. Banks issued their cards, and tech companies built faster systems. American Express was different. It was closed. That exclusivity gave it power, but also limits. Then came 9/11s and the 2008 financial crisis. For a company built on trust and prestige, these were existential blows. Travel collapsed, spending froze, millions defaulted. American Express faced billions in losses. But here's what's remarkable. It didn't die, it adapted. It reinvented itself again. Post-2008, the world entered the digital era of payments. Fintechs like PayPal, Square, and Apple Pay threatened to disrupt the old giants. But American Express had one thing they did in decades of data and customer loyalty. Instead of chasing everyone, Amex doubled down on its brand. It became a lifestyle company, not just a financial service. Airport lounges, partnerships with airlines and hotels, concierge services. They made spending feel like belonging. It wasn't a card anymore, it was an identity. And in the new digital economy, identity was everything. Amex invested heavily in machine learning, fraud detection, and predictive analytics. It began partnering with startups and embracing blockchain experiments, quietly preparing for the next era of finance. It wasn't loud, it was strategic. Because American Express had learned one thing over a century and a half. The game isn't about transactions, it's about trust at scale. Here's what most people don't realize. Every time you use an American Express card, that data feeds a machine worth over $1 trillion. American Express doesn't just make money from fees or interest, it owns a global financial network, connecting consumers, merchants, banks, and investors. It sells insight, it sells access, it sells the illusion of freedom built on precise psychological engineering. That is the true genius of AmEx. It turned debt into prestige. It made spending aspirational. It built a money machine that profits whether you save, spend, or struggle. And all of it runs quietly behind elegant branding and polite customer service. Today, American Express has over 130 million active cards worldwide. It processes $1.5 trillion in annual volume. Its market value exceeds $150 billion and its brand, intangible, emotional, iconic, is ranked among the world's most trusted. But here's the paradox. AmEx built an empire on exclusivity, yet it now survives on scale. It sells the image of independence, yet thrives on dependency. And it markets empowerment while quietly mastering control. And because in modern capitalism, power doesn't look like armies anymore. It looks like algorithms. It looks like loyalty programs. It looks like a card in your pocket. So what can we learn from the rise of American Express? Lesson 1. Trust is the ultimate currency. AmEx proved that people don't just buy products, they buy belief. When a brand becomes a badge of identity, it transcends economics. Lesson 2. Data is power. Long before big tech, American Express was building digital profiles of human behavior. They understood who spends, when and why, and they turned that into prediction and profit. Lesson 3. Control often hides behind convenience. Every innovation from traveler's checks to mobile payments comes with surveillance, fees, and influence. In exchange for ease, we give up control. The question isn't whether American Express is good or bad, it's whether we understand the system we're part of. In 1853, men founded a delivery company. In 2025, that company influences the flow of global capital. It began by delivering packages. Now it delivers power. American Express is more than a brand. It's a reflection of us, our ambitions, our anxieties, our need to belong, and maybe that's the real secret. The money machine doesn't just run on profit. It runs on human desire. So next time you swipe that card, ask yourself, who's really in control? Because in the world of modern finance, the most powerful machines don't need oil, they run on trust.